has happened.
CVC Capital has hired an investment bank to launch the sale process.
The debt, as we all know, is payable by printing more money.
The RBI may be wanting to prevent speculation in the light of this volatility abroad.
For the markets, well, it has been seeing some drawdowns from the top.
It's absolutely listless day for the Nifty, at least. Neither here nor there. Down 10, 12 points, down 30, a couple hours back. So there is not very much happening, at least at the frontline level. But there's a lot happening in stocks as always. With us here on a fresh new edition, a closing bell. We're coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi. Good afternoon.
Hi, good afternoon. It's a bit of a session of consolidation for our markets, right?
Yeah, I mean, consolidation, but 300 points in the last two sessions. Yeah. So I think, that's the backdrop with which we came in this morning. By the way, the global setup, etc., is looking pretty good. I looked at the US futures, they're slightly higher. Europe is trading marginally up. The dollar has been down for the third straight session. Actually, dollar is down here in Asian trade as well. It's not a bad backdrop. It's just that perhaps the market here bounced in a meaningful way over the last two sessions or so. So will we see, bigger activity, bigger action in the last 60 minutes? That's the question. For now, we're at about 19,130. What I want to do is just put out levels because, this is now about day-to-day trying to get past some of these important resistances, etc., to build on the recovery that we've seen. So let's just begin there. So the Nifty, the Nifty is not doing very much. The Nifty's got to get to the 19,280 levels, which is the first retracement for the Nifty. But the Bank Nifty it got to the 50% retracement of the October fall. So that's the first one. That level is 43,348. The high today is just about 5 or 6 points around that level. We crossed that and then the Bank Nifty sold off from there. So that's the first level. That's Bank Nifty. The mid-cap index got to 38% retracement and then pulled back from there. So it's interesting. That level is 39,136 on the mid-cap index, the Nifty mid-cap index, that is. And we pulled back from that level. Even after the pullback, by the way, out of the indices, the Nifty, Bank Nifty, mid-cap and small-cap indices, the mid-cap index is doing the best. And last is the small-cap index, which sold off the most, but I think it's also, the strongest of the lot. That is at the 61.8% retracement of its full fall. That 7% fall that we saw, that number is 12,728 on the Nifty small-cap index. So we are round about there. And that's the reason why I said it's almost like a holding pattern kind of day, eyeing those levels, very close to these levels, all indices, and perhaps maybe with a day's break, we come back to resuming and crossing some of these levels. Reema.
Hi. So, as you said, we've had 300 points of gains under our belt over the last 2 days. So today has been largely consolidating around the 19,100. But the good part is we're protecting the lows. The Nifty went down to levels of 19,067. And from that level, it's seen a recovery of more than 50 points, closer to 70 points now as we speak. Even the mid-cap index dipped and now has started recovering once again. And the mid-cap index is up close to about 0.8%. The advanced decline, there you have it. First the rise, then the fall, and now the recovery once again. The advanced decline ratio, too, is holding up pretty steady. 3 stocks in the green for 2 in the red. In terms of stocks, right now, at least names like Titan, Maruti Suzuki, these are seeing some buying. But just keep your eye out on ICICI Bank. That's seen a bit of a fall in the last 30 minutes.
Okay, all right. ICICI Bank. But keep an eye on the Nifty Financial Services Index. That plays out expiry right today. So that's the one that's going to be moving. I think just a short while back, Nifty Financial Services Index was holding well in the green. I think it perked up a little bit. Yeah, it's moved back in the green. A few stocks, though, that in the last half hour moved quite well. Gail and IOC, both of them declared their numbers. Sonal will join us for a quick analysis. So both of them are spiked up. And Zee Enterprises as well. Certainly that one as well has moved to the high point of the day. And big volume spot, both Zee as well as on Sun TV. So keep an eye out on a couple of those names as well. How do you position yourself, though, in the final hour of trade? Midesh Thakkar is back with us. Midesh, what's your take? The last time I asked you about this was pre-open and the markets were flat. And now we just got 60 minutes to go and the markets are flat, not moved a point as well. So, someone wanted to take a fresh trade. They didn't have time all through the day. They're pretty much getting it at market start. Tell us your view.
Yeah. So, Nigel, I think what has happened in the last 5.5, 6 hours of action is that the hourly indicators, they have stopped the negative movement and they are turning flat, which means that the bounce back could extend and we could see the index make one more attempt towards 19,250 and the bank nifty towards 43,400. So in that sense, I think the short term looks positive. Whether we manage to cross that, I still doubt, it will happen in the first attempt. But, that is a call which we take once we reach those levels. So for the time being, I'll be slightly positively biased. On the stock side, I think, I have two buy recommendations as well. Lalpath, which with a disclaimer that, it's been a recommendation to our clients. So there's vested interest. That's a buy with a stop at 23.90 for a targets of 24.80. And CDSL with a disclaimer that I personally hold the stock in my portfolio. That's a buy as well. Keep a stop below 14.10, look for targets of 15.25.
Okay, thank you very much for that. VGAR numbers flashing for you on your screen. Top line growth 15%, but the bottom line acceleration is more at 35% plus. So there appears to be some pickup in the company's margins. The stock initially saw a spurt higher and now is just finding its level. There you have it. Margins have expanded by 70 basis points on a year-on-year basis. So 15% top line growth. Add to that a 70 basis points margin expansion, and that's resulting in a 34% jump in the company's profitability. Siemens is a stock on our radar. Reports suggest that Siemens Energy is considering a stake sale in the company to the parent company, Siemens AG. Upasana joins in with details on this story. Upasana.
According to the Bloomberg report, Siemens Energy is considering selling off 24% stake in India-listed Siemens Limited to Siemens AG. The partial sale would be a quick way to strengthen the Siemens Energy's capital base. Now let us understand what is the key problem. Siemens Energy has a record order book of 109 billion euros, but execution is a key challenge. Mind you, in July, S&P has downgraded the long-term credit rating to BBB negative. To meet its order book commitments, Siemens Energy has sought government guarantees. Now moving towards Siemens India Limited, the company owns almost 25% stake in Siemens Energy, and Siemens still provides 7 billion euros of performance guarantee to Siemens Energy versus 40 billion euros 3 years ago. Therefore, the Siemens has a vested interest in the stability of Siemens Energy because it remains liable. Now moving towards what are the other options that Siemens Energy can be exploring. According to the Reuters report, companies weighing the sale of smaller divisions to boost cash following a recent deal to sell its high voltage component division to a PE equity firm named Triton. Now, what are the implications moving forward for Siemens India is what we are assessing. The transfer of stake from Siemens Energy to Siemens AG will have no direct impact in India operations. However, a deterioration in the health of Siemens AG, if it occurs, can have implications for the India business, is what we understand.
Okay, thank you very much for that. The stock initially was down a lot more, but right now it's lower by close to about 3%. It's recovered from the lows that it hit, closer to about 11:30. Dipan Mehta is with us. Dipan, as Upasana was pointing out, the transfer of stake from Siemens Energy to Siemens AG has no direct impact on the India operations. But, the street has been worried about the transactions between the various Siemens entity and the parent companies. So how is the Indian investors reading this particular corporate development if it takes place?
Good afternoon, and thank you for having me on your show. I think the investor looking at it as unfriendly towards minority shareholders. And really, this is the risk factor of investing in MNC companies because they were forced to get listed under FERA. And then when they had other divisions and other businesses to get into India, by the time the laws had changed and they could then set up 100% subsidiaries. And then there was always a conflict of interest, related party transactions. And that always caused some amount of caution, or I would say, fear in the minds of the investors that the good businesses would be in the 100% subsidiaries and the other businesses would be in the listed companies. So this is something you have to grapple with and live with as far as a company like Siemens are concerned. Also, Siemens, ABB, I think these companies are very richly valued. So any kind of negative news flow which comes through, does have an exaggerated effect as well. But on the whole, I think looking at the valuation and looking at the growth prospects, I think the stock is fairly valued. I would say slightly overvalued. And there may be better plays in the engineering space.
Okay, all right. Hi, Deepan. Good afternoon. Deepan, what about some of these media companies? Zee Entertainment, you have Sony, both of them, that deal that's pending. And Sun TV as well has moved to the high point of the day. Do you like any of these companies? They've always had value. Sun TV as well, cash in the books, clean balance sheet, the IPL franchise as well. But they've not made any big money. Do you think the time has come, either Zee or Sun TV?
Good afternoon, Nigel. I just have an angle over here. I was going through HUL and Procter & Gamble and Nestle numbers and some of the other FMCG companies. We have all seen spike in advertising spend over there. And that augurs very well for these media companies. Traditionally, the large FMCG players are the ones who are advertising on all these terrestrial channel operators like Sun TV or Zee for that matter. And ad revenues have been flat to declining for many quarters. So maybe this festive season may be very good for these TV companies, these media companies, which have got such popular channels. And the decline in ad revenue or the stagnancy there may get reversed. Base effect also will help. And these media businesses are such that they have very high operating leverage. So, if they have a 15-20% increase in advertising revenues, a lot of it will go to the bottom line as well. Some of it, of course, get invested in content. But large part of it, they will go towards, going towards the earnings per share of the company. So I think that given the valuations at which these companies are trading at, and then Zee especially, one uncertainty is over and done with, you could have a nice trading rally over the next few months in such media companies like Sun TV as well as Zee Entertainment. Sorry.
Deepan, also elections, right? I mean,
yes,
both state governments and central government into next year, it's always boom time. So yeah, thanks for that, Deepan. Coming back to you for more, but let's just look at Gail as well. Gail just released its numbers. Sonal is here just to kind of shine the spotlight on what these numbers look like. Sonal, over to you.
Well, it was a good set, Prashant, and it was driven by their natural gas marketing segment, which continues to be the growth driver this time around, and it was led by lower spot LNG prices that we saw as well. If we look at the overall numbers, revenue slightly lower than the estimates at 31,807 crore rupees, but EBITDA was way higher at 3,500 crore rupees versus an estimate of 2,450 crore rupees. And if we look at margins as well, at 11%, this compares with a poll of 7.2%. Net profits accordingly have come in higher than the poll at 2,405 crore rupees. This compares with the CNBC-TV18 poll of 1,734 crore rupees. Now, if we look at the segments as well, in most of the parameters, there is a beat on estimates. Looking at natural gas transmission, largely in line with Kotak estimates, coming in at 1,290 crore rupees. But LPG transmission EBIT has been lower than Kotak estimates at around 82 crores. But for marketing, that's where the beat has come in. 1,784 crore rupees versus 1,000 crore rupees, which was estimated by Kotak. Petchem losses have been lower than what was expected, and even in LPG liquid hydrocarbon segment, the losses have been lower than what the street was working with. So yes, it is a top-down beat, especially on the EBITDA front, and that's what the street seems to like, that after a very weak quarter, there has been a sequential recovery, and that bodes well for the stock.
Now, point taken. Thanks very much for that, Sonal. The other name which is rallying away is CDSL. CDSL had a decent day, I think day before yesterday. So numbers were good, and it's back up about 6%. Actually, it's the largest volume traded gainer across the board right now. Deepan, any thoughts on this one, CDSL?
No, I think CDSL, there's some positive news flow also. I think the MC has made it mandatory for private companies also to have their shares dematted. And that will mean a big opportunity, I would say a reasonably decent opportunity for CDSL as well, because clearly that is the preferred depository for a lot of private sector companies to get their ISINs created and listed and then maintained over there. So although they may not get the revenues from the transactions, but the actual subscription fee that these companies will pay to get their shares dematted with a depository, that could definitely be an opportunity. Of course, we are seeing boom time as far as stock trading and new account openings are concerned.
All right, Deepan, I wanted your view on VIP. We have the numbers that are flashing on the screen. The stock at its peak was around 760 rupees. Now, as we speak, because of these numbers, revenue growth only around 6%. I don't think this is anyway a big quarter for them. The EBITDA number as well is down close to 26%, so margins get compressed. But I don't think the story is about the past quarter. The street wants to understand what's the way ahead. Can they turn around things? They've got a new management at the top. And how much of the bad news is in the price? Obviously, you're waiting by in case there's a corporate action. But what's your view at around 600 rupees?
Well, I think it's a great business, and we're very positive on leisure travel and business travel. And I think VIP is one of the ways to play that particular investment theme. One needs to go a bit deeper as to why the numbers have come so disappointing. But there is some amount of stress in retail spending. We have seen that, but that's transient. And I think on a bad number like this, if there's a further sell-off on VIP, that could be a good entry point because this is a nice secular growth story.
Butterfly Gandhimati is now down close to about 7%. Volumes today, of course, are on the lower side. But how does this, the recent news about the minority shareholders or the public shareholders rejecting the merger of Butterfly Gandhimati with Crompton? It's already a subsidiary. Butterfly Gandhimati is already a subsidiary of Crompton. Can you take us through the implications of this development?
I haven't really studied it, Rima, because it's already a subsidiary and it's anyway getting merged into or consolidated into Crompton from that point of view. So I think, yeah, a bit of a disappointment, but I haven't really understood the implications of this particular development. So I'd just like to pass on this question of yours.
Okay, but it's quite incredible, right, Deepan, that after sort of, the acquisition is done, everything is done. They're consolidating the numbers, I think. Now there is a rejection of this one. So there'll be two listed, in a way, Crompton companies. So unusual, very, very unusual that at this late stage, something like this is actually taking place now.
Yeah, that's right. I think it is a bit surprising, but there are many instances of holding company and subsidiary company being listed. There are many, many such cases. Reliance Industries, many other companies, M&M for that matter, also L&T. So nothing wrong in having two listed companies per se. So
but the thing here is
the operation.
Yeah, no, I'm saying in the same line of business, in that sense, right? There are two consumer companies in the same group, and of course the plan was to sort of merge them, which of course now is not going to happen. Got it. Anything else caught your eye, Deepan? Any thoughts on these asset management companies? Nippon India, for example, is up about 5.5%. Names like UTI, AMC. I even heard sell side sort of note. Pitching Birla AMC as an idea. Any thoughts?
I think they're good businesses, and we like this entire wealth management space. But the better way to play it would be through these listed wealth management companies like, say, Anand Rathi or 361 and this Nuvama new listing. You see the numbers which have come through from these wealth managers; they've been phenomenal. And I think clearly they've got the tech platform right. They've got the RM relationships going with their HNI clients. And they're earning huge fees from these AMC companies you spoke about, trying to sell their mutual funds and also offer other wealth management products. So they're great, great businesses. And in line with the kind of wealth effect taking place in India and rising savings rate and rising incomes and the overall perception now that, if you have money, you need someone to help you manage it better. It's not like the olden days where the head of the family would manage it. I think it's getting more and more sophisticated from that point of view. So I see very good prospects for these 3-4 companies, which are the listed wealth managers. And they could be great compounding stories. They can easily grow at 25-30% or so. And in a way, they're not completely linked to the equity market, because if the equity market goes negative or you have a bad year, then they are selling debt products and they're selling alternative investment ideas, even property funds. And a lot of their income is, I would say, on a regular basis, based on the advice which they give, which is based on the corpus which they manage. So there's a high degree of stability also in their earnings.
That's interesting. Not AMCs, but wealth management firms, and there are now many listed out there. Deepan, just one last question. There is, and we'll put out a preview for L&T later. I'll report in the evening. But any thoughts on L&T? It's been getting, some large orders, especially from that Middle East region.
I only hope it's not going to be sell on news as far as L&T is concerned. I've seen numbers come through, and when I look at them, they're pretty decent, they're pretty good. And then when you see that it has missed analyst estimate, or there's a sell-off of 2-3% after that. Like IDFC First Bank, I thought great numbers, but analysts were expecting even more. I hope something similar doesn't play out in L&T, and just look at the numbers on an absolute basis and not what the expectations of the street are.
Okay, well, Deepan, we'll leave it there. Thank you very much for your time. Great speaking with you. It's a pleasure having you with us here on CNBC TV18. We'll take a quick commercial break here. We'll come back. We'll have Shibani Sarkar Kurian from Kotak Mahindra Asset Management Company joining in on the other side. Stay tuned. Welcome back. So you've got the market, which is, come back into the green. I mean, so yeah, there's just a tinge of green, which has come through. It's not as if there was a huge recovery. When we started at 230, the Nifty was down about 11, 12 points. So that's now disappeared, and there is a little bit of green. The Nifty Bank, let's just pull that up. Yeah, they're also, we're up about 5 odd points or so. Not quite yet at the opening level. We opened this morning at 43,356. We're about 40 points away, 30 points away from that particular level. But there is a bit of a definite pickup that one is seeing right now. 1,400 stocks are higher, and you've got about 940 stocks which are lower. Shibani Sarkar Kurian is with us, Senior EVP and Head of Equity Research at Kotak Mahindra Asset Management Company. Shibani, good to have you with us here. Thank you very much for your time.
Hi, good afternoon.
I just want to ask you about M&M Finance, which reported numbers. The stock sold off very sharply yesterday. We had the management with us. They're kind of sanguine about prospects. They're saying, well, they're focusing on, prime customers. moving away from earn as you repay customers, that segment. So things 2 quarters down will be much better. It's a very widely owned stock. I think about 0.25% of the outstanding stock is owned by mutual funds. Just wanted your thoughts on how you would look at something like a M&M Finance. If you own it, and if you can comment on the situation specifically, that would be great.
Yeah, hi Prashant. Unfortunately, we'll not be able to comment specifically on the stock, but let me try to, maybe answer the question slightly differently. So if you look at the overall NBFC segment as such, and specifically NBFCs, which are the auto financing segment, what we have seen is that overall growth has been fairly robust. And in fact, growth in terms of AUM growth has been largely ahead of what the street has been anticipating. Now, within the NBFC pocket, what we've also started seeing is that many of the companies are focusing now on customer segments which are more prime, and therefore moving up in terms of the overall customer, the prime customer segment, and therefore moving down in terms of the customer profile from a risk perspective and reducing risk on the portfolio. So that's number one. The second is, if you look at the NBFC space over the last 1 year, most of them have seen margin pressure, primarily because they are wholesale funded, and therefore as interest rates went up, margins contracted, and specifically for auto financiers, they have fixed rate books, and therefore again the yield pressure. Now what we are seeing is a lot of the cost of funds impact is possibly factored in, and margins should start to stabilize. And if at any point in time next year there is a rate cut cycle, then some of these fixed rate book, which is the auto financing segment, should benefit. Net, when we look at NBFCs, we have to look at few key things. One, NBFCs which have a strong parent, NBFCs which have a niche in terms of the segment and which they operate in, that gives them pricing power. And third, of course, is valuations. In pockets, we believe valuations where NBFCs are concerned are fairly attractive, and return ratio profiles have improved, as well as asset quality. So within the overall space of the auto financing segment, there are pockets of opportunity which we see present today.
But Shivani, did you also feel that within NBFCs over the last many years, everybody's doing everything now? I mean, you used to have industry leader in one segment, home loans or gold finance or personal loans, or I mean, now you look at pretty much, with very few exceptions, there are exceptions, but everyone is getting into pretty much all segments, right?
You are absolutely right. The overall competitive intensity across segments, whether it be home loans or even, for instance, auto segment or SME lending, especially within the NBFCs, has intensified. Also in pockets, in domains where NBFCs were largely present, now you're starting to see some of the larger banks come in, and therefore the competitive intensity has intensified significantly. Some of that is already reflecting in the fact that despite the fact that interest rates have moved up, there is lack of pricing power, which is why your yields have not moved up and your cost of funds have moved up in the same time, and therefore margin pressure where some of these NBFCs are concerned. But as you rightly pointed out, even today there are pockets of NBFCs which may have domain leadership, whether it be a certain product segment, whether it be a certain geography, or be it a certain customer segment. And therefore within the NBFC basket, we've always felt that given that there is competitive intensity, especially from banks, you need to identify those NBFCs where you see structural runway for growth and market share leadership.
Shivani, afternoon. When we last spoke, you said you're watching the Q2 earnings very closely to see whether we are seeing a pickup in the rural demand, any signs of recovery. So based on that, on what we've seen so far in Q2 earnings, what has been your takeaway on the rural demand?
So it's been a very, very slow and steady improvement where rural demand is concerned. It's not that we've seen any sign which says that there's a runaway recovery where rural demand goes. If you look at some of the companies that have reported numbers so far and the commentary that has come out, things have not worsened, but things are improving, but at a very, very slow and gradual pace. But the direction is of improvement. So some of the key factors, of course, we still need to watch out for. One is you would know that, from an overall monsoon perspective, rainfall this time around was 6% below long-term averages. The more important factor is the sowing pattern. So Kharif sowing has been largely the similar sort of trends that we saw last year, so flat YOY. But I think what we are really watching out for is the Rabi sowing pattern as well, because reservoir levels are below long-term averages, and therefore whether that has an impact on Rabi sowing. The second is festive demand has been fairly buoyant, and therefore that bodes well from a rural recovery perspective. So again, it's still wait and watch, pretty much data dependent. But as we were discussing, there is no data point which still suggests that rural recovery is on a runaway path as yet.
Hi Shibani, good afternoon. What about the state elections? As of now, it appears that the feedback you're getting is mixed out there. How big an impact it can have on the equity markets? Because the prime focus would be on the central government, on the elections next year. But state elections, could they cause some bit of a worry for market participants?
So I think, as you rightly pointed out, the market would possibly look next year in terms of the general election. Of course, what we have seen in the past, while state elections in the near term can result in some degree of volatility for markets, but finally, I think market looks at what's happening at the center from a policy perspective, and that's more important from a structural driver for the market. I think as we go into the next year, there are many such events that are planned. That will likely play out. State elections is one of them. The earnings season as it progresses is also likely to be the other factor. I think also what we need to watch out for is that so far our overall macro and the domestic demand scenario has been holding up fairly well. But at the margin, we need to possibly keep in mind that there have been a few red flags. So for instance, we as a country from a macro perspective have a lot going in as far as crude is concerned, and crude has inched up and has been volatile. Secondly, the flows, especially where FIIs are concerned, have turned negative once again. So, and finally, of course, valuations, which we have discussed many times on your show as well. So what we believe is that from now till maybe sometime next year when the elections, etc., are concerned, markets could see some degree of volatility. And the way we have been positioning our portfolios has been preference for large cap over mid and small cap, and that preference continues given current valuation.
Shivani, HDFC Bank held a meeting for buy side. Did you attend it, or your team attended it?
Yeah, so again, we will not be able to talk specifically on a particular company, but yeah, you're right that that event did take place.
And okay, and not about talking. I mean, it's almost a sector by itself, right? So, are you positive on the name? I mean, if you can, as much as you can tell us. Any changes post that meeting or an update? Yeah.
No, so I think, like you said, it's the HDFC Bank, as you were talking about, is part of a larger private sector banking sector. And, I think the overall sector dynamics have been pretty much cohesive or pretty much homogeneous. I think the entire large cap private sector banking pack has underperformed if you look at what's been happening over the last year or so. And there have been 2-3 reasons for it. One was the scare that loan growth would come off significantly. Loan growth has been holding up, and in fact, private banks have been growing faster than industry. The second fear was that margins would contract. And of course, margins which went up sharply have started moving down. And if you looked at the numbers over the last few quarters, for the large private banks, you have seen some degree of margin contraction. The third aspect has been the ownership, where again, ownership levels being high has also impacted the stock price performance, despite the fact that across the board for most of the private banks in the last 3 years, you have seen return ratio profile improving significantly, asset quality trends being fairly benign. Now we are at a juncture when you look at valuations where in the market you are struggling to find pockets of valuations which are reasonable or attractive. The large private banks give you that comfort on valuations, especially in context with their ROEs. So here in the large private banking space, we do believe that if one has a slightly longer term view, current valuations are fairly attractive. And we do believe that these banks will continue in terms of market share gains, as well as the fact that the return ratio profile in terms of ROEs would remain superior.
Okay, all right. They've been underperformers, the BFSI space, Shivani, but as you said, earnings visibility, valuations, they are in that favor. Let's see how fast they can catch up, but otherwise they've been relative underperformers. Take your point on that. And thanks so much for joining in this afternoon, Shibani, and giving us your views on the markets and individual sectors that we discussed as well. By the way, before we move on, just pull up the intraday chart on the Nifty. The Nifty has moved to the low point of the day, and you pull up the Nifty Bank, that one as well should come up for you. So it managed to move into the green, and in a matter of 10 minutes, it swung close to 200 points. The Nifty Bank, the Nifty Financial Services Index as well should come up for you on the screen. Both those two have moved lower. the Nifty Financial Services Index because it's playing out expiry. So that's the reason why that one as well has suddenly moved into the red. But let's turn our attention to an exclusive story that Nisha broke earlier today with regard to the hospital space. She's joining to tell us about HCG. Nisha?
Thanks for that. Yes, the stock has been impacted because of our news break earlier today. And what we are gathering from sources with direct knowledge is that the promoter of Healthcare Global, a private equity firm, CVC Capital, has put the company on the block, is what three sources, independent sources with direct knowledge of the development, have shared with CNBC-TV18. Now, we also gather that they are looking at an ask price of about 4,000 odd crores or upwards of that in terms of exiting the company and selling the controlling stake. They hold a little over 60% stake in Healthcare Global is what we are gathering. They have even hired an investment bank. Now, looking at the suitors, while healthcare as well as hospitals is an attractive space and especially a buyout opportunity for large private equity players, this theme has been playing out. So large private equity players like KKR as well as Baring Asia are some of the ones which are likely to be interested and already in talks right now with the company for a possible buyout. What I also gather is that a large industry strategic player, which is Manipal Hospitals, is also an interested party. But of course, as the deal proceeds further, there could be more buyers in the fray for this particular development as well. When we talk about premium to this particular stock and also the expectation of higher valuation, the private equity owner has been looking at beefing up the valuation also by smaller acquisitions which lead to expansion of the company. We reached out to all the players, and we even reached out to the office of Ajay Kumar, Dr. Ajay Kumar, who's also a promoter with over 10% stake. His stance on this stake sale is undecided right now, but we did not get comments from any of the parties that have been mentioned in this particular developing story. But definitely hospital deals and private equity interest in that is hot on the deal street right now.
Thank you very much for that. That's a big corporate development that we're tracking very closely. Get into a break. On the other side, as always, we'll tell you what dealing rooms are saying in our segment, D Street Chatter. Welcome back. There's a sudden fall in the markets, and now the Nifty has breached its afternoon lows. There you have it. This is a 3 p.m. effect, perhaps to do with the weekly expiry that you have on the Fin Nifty, because banks, pull up the Nifty banking index, that's down 230 points, and from the day's high, the Nifty Bank has fallen close to about 550 points. So there has been a sudden turn in the market sentiment. We were attempting a pullback, trying to sustain, consolidate above 19,100, but there has been a sharp fall in the markets post 3 o'clock. Reliance Industries is down 1.25%, so that's been a big drag. Pull up the typical suspects in the banking space, which tend to hurt. An ICICI Bank or an HDFC Bank. ICICI Bank is a cut of over 1%, while HDFC Bank too is trading with losses of about 0.6%. So the markets need some monitoring. It's a perfect time then to talk and tell you what dealing rooms are saying this afternoon. Nimesh joins in with D Street Chatter. Nimesh, sudden turn in the market sentiment and a sell-off that we're staring at.
Well, Rima, I need to really figure out what happened in the last 10 minutes of trade. But, again, today's whole market was not about the indices. It was all about the broader market outperformance. After many days of correction, some bit of traction seems to be back in the broader markets. The mid-cap index was nearly up 1%, and a lot of stocks, individual names were buzzing in trade up 10, 12, 15% on good volumes as well. So today's really action is in the broader markets. So that's something to track. But even in terms of flows, the feedback was that there is selling from the larger FIs. So even in today's trade, the sense is that maybe you'll see a sell figure from the FI. So that feedback continues. I guess some bit of traction is back in the PSU stocks as well. So select buying in the PSU names, but there is some bit of traction back, is what I understand from a flow perspective. And again, from a technical level, I've been saying for the last few days, on the upside, 19,230, 19,300 is a very important resistance level to watch out for. But not sure what happened in the last 10 minutes for a sharp vertical fall. But today's move is largely in the broader markets, and that's outperforming.
All right, Nimesh, I guess it has to do with the Nifty Financial Services expiry because that's the one that's taken the sharpest knock. But individual stocks, what are you picking up?
Well, a lot of blocks today, and that's part of my charter list as well. The first one is Piramal Pharma, large block, nearly 6 crore shares got changed hands, and the stock is at day's high up 12%. Well, the buzz is that maybe one domestic mutual fund was a likely buyer, but again, no confirmation, so to speak, and there is a potential possibility of an interstate transfer as well. So disclosures will be quite interesting in Piramal Pharma. Interestingly, today Jefferies put out a note, and the note says that potentially the stock can double in the next 3 years. So that's something which has excited the street. The second stock is JNFC, buzzing for the last few days. Even in today's trade, there are strong buy flows is what been indicated. Again, all eyes will be on the board meet on November 8th for a buyback, so that's something to track. But looking at the way the stock is in the open interest position, the stock may enter the F&O band, so that is something to track in GNFC. The third stock is Kesoram Industries. Again, there is a small block, close to 14 odd lakh shares. I understand some HNI investors bought in today's block, and stock is locked at 5% upper circuit. And the last one is ITD Cementation. The buzz is that maybe the earnings could be quite strong, but from a flow perspective, a leading domestic mutual fund was a seller for the last many days. Seems like that selling is largely over in ITD Cementation. So earnings could be very, very important to track as far as that stock is concerned.
Okay, all right, Ramesh, thanks a lot for that. You said there were a lot of large blocks that have taken place as well today. Let's address one of those companies, the Inox group of companies. They have been in focus. And on Inox Wind, we have seen huge blocks taking place. More than 10% equity has changed hands. To find out who were the parties out there, Mr. Devansh Jain, the whole-time director of the company, joins us on the show. Hi, Devansh. Thanks so much for joining in on the show. Appreciate you joining in. Well, close to 10% equity has changed hands. And, our research team is telling us that it's a possibility that Inox Wind Energy could have been the seller. Could you clarify who was the seller, who was the participants in today's block? The seller, and what does the promoter holding come down to?
Hi, Nigel. Thanks for having me. So IWEL, Inox Wind Energy Limited, the promoter holding company of Inox Wind, has sold its stake in IWL to both long-only domestic and FII investors. We had always maintained publicly that our larger goal is to make this entity a net debt-free entity. And I think we've ended up raising close to 800 crores today. And with this, along with the internal accruals we expect over H2, the whole company becomes net debt free. So again, just to go back, when the sector pain started over the past 6 years, we had reached almost 2.5 to 2.7 thousand crores of debt. And we're now down to about 200 to 300 odd crores of debt, which will get off from internal accrual. So we've completely rejigged the entire balance sheet. so that we are fully geared for the huge growth coming up in the sector.
Devan, just want to clarify, Inox Wind Energy held close to 50% stake in the company, right? Prior to this block. Now,
that's right.
Post this block, what does the stake come down to?
So IWEL is now down to about 40.5%. And the promoters directly own close to 15% of the company. So as promoters, we own about 55% of Inox Wind now.
Got it.
Got it. And this was an 800 crore deal. And now to pare down the balance 2 to 300 crore, you don't need to do any further stake sale. It will be done via internal accruals.
Absolutely, Rima. I think, as I mentioned, over the past 6 years, we had amassed almost 2,700 crores of debt, down to the last 200, 300, which will all go away from internal accruals. There is no strategic action planned any further. That was the last of strategic actions to clean up the balance sheet.
Who were the buyers in today's transaction? Can you give some color on that? And what was the overall demand for this 800 crore block?
So I think they were very, very strong marquee names, some of the largest investors globally. Obviously, these names will be in the public domain by the evening. I can't share them at this point in time. We've got the most marquee domestic names, but I think we're particularly excited by the quality of the FIIs who've come in. They're phenomenal names, probably the largest investors globally. So yeah, I think it's only a long-only book and very, very strong demand. We've not been able to fulfill most of the demand for most people.
Oh, interesting. And the body language of yours as well is telling you that you're feeling good about this. A lot of demand coming in for your stock. Obviously, that feels good. But tell us, the promoter holding comes down from around 64% to around 55%. No further stake sale, or you still will hold majority and maybe bring it down to around 50-51%?
No, Nigel, there's no question of any further stake sale. As promoters, we barely sell stake, but we've committed Inox Wind has to become debt-free after these 6 years of pain. The only other deal we'd ever done was a very small deal in Fluoro, which we invested back into the wind business. We don't need any further capital in Inox Wind. We are very, very strong. The balance sheet is completely geared for the huge upcoming growth in the sector, as I said. So we don't intend to sell any further stake.
So in FY25, now that you will have no debt, what could be the annual interest savings?
Look, I mean, at one point in time, if you go back to the last financial year...
No, just say FY25 versus FY24. The interest savings.
I think we should have zero. It's going to be zero interest costs.
No, so what could it be this year? Because next year will be zero. So this year, what could be the decline in interest savings to understand the delta next year?
Look, I think we're at about 150 to 175 crore run rate at this point in time in this financial year. So naturally, that will drop to about 20, 30 crores in the full financial year, which are the banking charges, which are the normal charges on non-fund-based facilities, etc. But on the interest side, it will be zero. So almost 150 crores will get cleaned up.
Hi, this is Dimeshia. If I can ask a question?
Sure.
Okay, you spoke about some marquee names, buying in today's block deal. I know a few names, but names apart, what is exciting the larger investors to come at this level? In terms of business prospects, if you can share for the next 4 quarters how the business is going to shape up. Internationally, I believe some larger players are weakening. So, are you expecting a larger orders from the emerging markets, from Asia as well, going forward?
Look, first and foremost, we're completely focused on the Indian market. I think the potential in India is unparalleled. After the past 6 years of pain, we're really down to maybe 2 or 3 strong players in the Indian market. We have the lowest break-even. I mean, with this debt gone off, we frankly break even at negative sales, given our O&M subsidiary throws up more cash than our fixed costs. Having said that, I think the government is being very, very clear in terms of the targets they've set out, which is 500 gigawatts by 2030. They've announced 50 gigawatts of auctions every year, 10 gigawatts of plain vanilla wind auctions, 10 gigawatts of hybrid. The C&I market, the PSU market, the retail markets are all buzzing, booming. And I think as we move forward, you're going to see more and more order inflow, more and more execution. From our perspective, I think we have a fairly large order book, but I think in the coming weeks, over the next 2 quarters, we should be announcing multiple deals across PSUs, IPPs, C&I platforms, and the retail market.
Got that. Thank you.
Just one final question, Devansh. You said that you are bidding and you're winning deals on the private side and on the PSU side. So could you give us a mix of your portfolio right now? How much is PSU, how much is private, and how will that change going ahead?
I don't think we have any fixated target where it has to be 30% X or 40% Y. I think what's relevant for us is no single customer, ideally within a financial year, should be more than 25% of the business. And I think now that the whole sector's coming back very strongly, we're diversifying the entire order book. Presently, I think in our order book, PSUs would be about 40%, retail maybe about 15%, and the remaining 40-odd% would be C&I and IPPs. But as I mentioned, I don't think we have any specific targets. I think what we're really gunning for is next financial year, half of our order book would be turnkey execution, and half of it would be equipment supply. That's the broad goal which we have as a company.
Okay, all right, Devansh, thanks so much for joining in. Appreciate you fielding all our questions. And I think that look on your face, the body language tells us that there is a large party that's come in there and bought that block. We'll wait for a couple of hours more. I think Nimesh as well gave us a bit of a hint. And I think, we know that officially on the stock exchanges. So that's the management of Inox Wind sounding reasonably optimistic on the prospects of the business going ahead. The stock has recovered from the low point of the day. Slip into a short break. On the other side, Jay Bala is waiting for us. From Cash the Chaos, he'll tell us how is he reading the technicals of the market.
Welcome back. Markets are trying to find their feet. It's off from the absolute low that we had hit about 10 minutes back. which was 19,056. So from that level, we managed to climb up about 20 points, but still below the 19,100 mark. Banks continue to reel with losses of about 200 points. Today is the Nifty expiry. Jay Bala of Cash the Chaos is with us on the show now. Jay, interesting price action over the last few days. First, from Monday to Thursday of last week, we had a very, very sharp fall in the market, panic selling in some of the mid-cap names. And then on Friday and Monday, markets recovered. And today it's consolidating a bit. What has been your key takeaway of the price action over the last 10 days? And what does it tell you?
Hi, Rima. Good to be here. The important takeaway for the markets is not coming from Nifty, but coming from the Bank Nifty. I don't know if you have my charts in front of you, but I'll go. The banking index, is clocking a big reversal pattern from a major resistance. If you recall our May 30th interaction, I presented a chart where I pointed out the banking index not having much upsides, and I pointed to a long-term, trend line, like clockwork hitting every year, and the markets are rejecting off there. If you see the banking index, it's clocked a double top and broken down from here. The minimum objective for that is about 40,000 for the banking index. And if you look at the Nifty, it's clocked a head and shoulders top, and it's coming off from this top. So there's a small possibility that the Nifty could still clock, one more high, but it's a very small probability. The reason why I'm not leaning towards that, and I'm tending toward the possibility that Nifty is going to crack straight away, is because of the US market structure. And we'll get to that in a little later. And, if you look at the monthly charts from 2008, I pointed this out again in June, July, when the markets were clocking record highs, that the banking Nifty resistance, the long-term resistance, we draw from 2008 through 2015. It came at about 46,500 to 47,000, and that's exactly where the banking index is reversing from. So, multiple long-term resistances are coming. So we'll see what the Nifty does around 18,400 to 18,250. If that were to given, I think we are in for a very long-term top for the Nifty and the banking index.
Oopsie. Okay. All right. Not great news then, Jay, if we have to get to those levels. But tell us about another couple of key indicators. The dollar index, it seemed to be running away to around 107, but that cooled off. What's the view out there? And I didn't get the Nifty bank level. The Nifty, we've got that 18,200 to 18,450. But on the Nifty bank, what's the level on the downside?
Yeah, the important level is about 40,000. And 40, more importantly, rather than the price levels, if we see acceleration down, if we see back-to-back strong down days, that's going to be saying the market tops are in for both these indices. So, the speed of the move is also going to be important. When it comes to the dollar index, I think it's consolidating above 104.75. I don't think 104.75 is going to break. This pullback that we've seen from about 106.5 is going to stay above 104.75. That's my short-term conclusion. And we are in for short-term strength for the dollar index to about 109 to 110. That's a short-term objective. And post that, we're going to see a pullback and the dollar index rally much stronger. So that's a medium-term outlook. So that's my short-term and medium-term view of the dollar index.
You said the Nifty Bank could likely head to 40,000 level. What does that mean for HDFC Bank? Because that's the heavyweight in the banking and even actually for the Nifty. What's the chart telling you?
That's right. See, the banking index makes 1/3 of the Nifty, and the HDFC Bank, the single stock, is actually having a very large weight for the banking index. And the predominant underperformance that I've been projecting for the banking index has been coming from HDFC Bank and the Indian bond yields. That's been hardening. That's resulting in the bonds selling off and resulting in lesser value for the banks holding the bonds in their portfolio. HDFC Bank has been a strong underperformer, and if it were to break below, say, 1,300 and change, that will be a long-term negative for it. And there are early warning signals that it could do that. So we'll be watching HDFC Bank really close.
Okay, let's spice things up a little bit. You're sounding too cautious, Jay. On one asset class, I think you're a little bit more optimistic is on Bitcoin. Not for the faint-hearted, but that could move up.
Absolutely, Nigel. It's very volatile, but it does look like it could be the place to hide for the short term at least. I would take it as a short term, if not the medium to long term. We'll see what the crypto does around 42,000 to 48,000 mark. I think it's in the short term, it's heading towards 42,000 at least. And if it were to bludgeon through the resistance of about 42,000, I would think it's in for a much bigger rise. But given that semiconductors in the US markets are likely to drop hard, I think this is a short-term up move rather than a long-term up move. So that's what I'm thinking on Bitcoin.
Jay, thank you very much for joining in. Counting down to the close, 2 minutes left for the bell to ring. And it's going to be a close for the Nifty below 19,100. A cut of 56 points. Not a big sell-off per se, considering that we had a 300-point rally over the last 2 trading sessions. So today we've given up 50, 60 odd points, but it's a bit disappointing considering where the Nifty started trade. The Nifty had started trade above that 19,200 mark. Banks sold off. Today is also the Nifty weekly expiry, and post 3M we had a sharp sell-off in the banking names. The Nifty Bank was down 200 points with names like ICICI Bank, IndusInd Bank, Axis Bank, HDFC Bank retreating a fair bit. Reliance Industries, the star in yesterday's trade, was up more than 2%, 2.5% yesterday. It's given up about 1% of that. Autos too on the back foot ahead of auto sales numbers tomorrow. Gainers include SBI Life, Titan, HDFC Life, Asian Paints. In fact, a bit of a decline in crude prices boded well for Asian Paints and Pidilite. But Nigel, no complaints about the broader markets, right? I think today it goes home as a day where the mid-caps outperformed.
Well, indeed, portfolios actually will feel good because the breadth of the markets were good. The mid-cap index was up 0.4%, small-cap index as well. Plenty of stocks did well. Pull up a few names. Arvind was up 10%. You had Piramal Pharma that was up close to around 9%. It had follow-through buying. Results were good, commentary was good, and we had a large trade as well. The power finance companies, PFC and REC, both of them flying away up 3.5% apiece. OG1 Small Finance Bank yesterday took a bit of a knock. Today it popped up in trade. On Vodafone Idea, there is still hope that maybe in fact they can come up with that money, and the funding plan will fall in place. So that's another stock that did pretty well in today's trading session. Inox Wind, that's the one where we saw a large trade, more than 10% equity changing hands, as the promoter entity told us that Inox Wind Energy, that's the one that's going to be deleveraging its balance sheet. So that's the reason why that large trade took place. So that was one stock that was under pressure. Suzlon as well pulled back closer to around the 30 rupee odd mark. But all in all, it was a good session actually. The headline index goes home with a cut of around 50 points. The Bank Nifty was under pressure. That's because HDFC and ICICI Bank, both of them ended in the red. But otherwise, Rima, a good session. Breadth of the market good. Portfolios feel good. More number of stocks advancing than declining stocks.
Okay, so here's what we'll do. We won't wrap up just yet on closing bell. We'll slip into a very short break. We'll come back and get you more news and updates. The day's not done, right? There's so many earnings to track. You've got L&T, Bharti, Tata Consumer. So in the next 30 minutes, we'll get you up to speed on what to expect from these large boys too.